Hello and welcome to this week's edition of Murphy's Market Minute. It is February 21st, 2025. We are almost 2 whole months into the year, and what a wild ride it's been.
Yeah, it's been pretty crazy.
Yeah. So we're going to, again, this is, what time is it? It's 11:16. So we're going to be done at 11:21, 11:22. And for more in-depth information, you can see our long-form podcast, which I think we have come up with the ever super creative name of the Alphi Podcast.
Yep. Or the other one you're tossing around. But I think Alphi Podcast is pretty solid.
Yeah, check out our Instagram at Alphi Podcast.
Yep.
Are we on Twitter or YouTube?
Yeah, we're doing Twitter, getting up on Twitter, X, and Instagram, of course, and then YouTube. As of right now, we've been posting some shorts on there, some of the YouTube Reels or whatever they call it. But hopefully starting next week, we get all the long form. So basically just exactly what you're already seeing with the shorts, but just everything else in between. So those are usually an hour or 2 hours or so.
All right.
We record one of those each week.
Awesome. Well, we're going to get right into it. So far, year to date, okay, the market hit a high, I think, on like around January 17th of about 6,112, 6,121 looks like. And today it's been mostly flat, a little bit of ups and downs as the market's been trying to digest. I think today it's at 6,074, so it's down just a bit off of its high. But for the year, it's still up 3.27%, which, isn't a bad 2-month run. But I think the market's just really trying to kind of wait and see what's going on with tariffs, interest rates, and stuff like that. So today we're going to kind of hit a few negatives first, right? We're always watching the negatives to see if they're going to develop anything into anything serious that we need to, take action in regards to people's retirement accounts on. So the very first thing, inflation fears have surged in February as consumer sentiment plunges over tariff uncertainty. Okay. And so this is from an article on Yahoo Finance by Alexandra Canal, senior reporter for them. Came out today, actually, at 10:47 a.m. Basically just that, as the media really tries to push all the chaos and the uncertainty in regards to Trump's, foreign relations strategies and tariffs and all that kind of stuff, it is having an impact. The University of Michigan Consumer Sentiment Survey released Friday showed headline sentiment extended its early month decline, sliding nearly 10% from January to a reading of 64.7, which actually isn't that bad. It's pretty good, actually. And it's on par, with the beginning of the month, right? So they say it's not necessarily a cause for panic at the moment, but these expectations are clearly being driven by concerns over policy and concerns over tariffs that could lead to price hikes. So it ends with this saying that but economists have largely taken a wait-and-see approach as most of Trump's tariff threats have yet to be implemented. So anything you want to add there?
Yeah, definitely just some uncertainty of what's going to be implemented, what's not. I know there's upcoming tariffs on automobiles and chips, so that's something that
steel.
Yeah, and so that's something that companies like NVIDIA that really take a pretty big market cap of S&P. It's some of it's already built in, but with the uncertainty, some people might be investing based on the thought that the tariffs won't hit.
Yeah,
and they do hit. Might shake things up a little bit.
Yep. Another negative is that U.S. existing home sales fell more than what was expected in January. They've dropped. They had 3 straight monthly increases, and then they dropped. They decreased 4.9% last month to a seasonally adjusted annual rate of 4.08 million units, the National Association of Realtors stated today. Economists pulled by Reuters had forecast home resales to slip to a rate of 4.12, so it fell a little bit more than what they expected. But, really, and we know that affordable housing is a challenge, is going to remain that way. So we'll see where that stays, but homes are one of the largest home building and home sales is a pretty large portion of our economy. It's usually a pretty good thing to track. All right. Now, one other kind of negative that occurred, and I think this is a really important one to watch. I love looking at stocks like Walmart, McDonald's, the things that like kind of appeal to the masses in times of negative economic situations, right? When things are going well, you probably don't want to get a $1 cheeseburger. But when they're not, you're probably going to start buying $1 cheeseburgers.
Yeah.
Right?
That's fair.
So actually, this could be a positive sign. It's just really interesting, right? Now that I'm thinking about it. Walmart investors, kind of according to a guy named Brian Sozzi, executive editor, again at Yahoo Finance, stated that Walmart investors got caught asleep at the switch. Shares logged their worst day in more than a year on Thursday, taking 6.23% as the retailer surprised investors with a weak 2025 outlook. So it'd really be interesting to see. I'm not sure if that's, a sign that, people aren't spending their money out of those inflationary fears. I think we talked about last week how savings have kind of gone back to pre-pandemic levels. Right. Yeah. So people have kind of spent all that. They've consumed all the sugar the Fed pumped into the economy. But then again, too, you got to take into account this, that 2024 had Walmart shares at 37 times estimated forward earnings, which compared to the 22 times that's afforded the rest of the S&P is very, very high.
Yeah.
So it could just be coming more in line with where it should be anyways, right? So those are really kind of like the three negative things that I wanted to hit on: housing, Walmart, and fears about inflation. But I want to counter all of this with something that I think is pretty positive, and that is that CEO optimism. This is from Deloitte, the Fortune Deloitte CEO survey. It tracks the perspectives and actions of CEOs from some of the world's largest and most influential companies. All right, now this is important because this is where you're going to see a lot of hiring take place. You're going to see a lot of capital expenditures on facilities, equipment, expansion, right? The better that these CEOs feel about the economy and their corporation's future prospects, the more they tend to invest in growth, right? And so kind of counter to everything else, is that I think this hit a major, major high. 84% of CEOs are optimistic or very optimistic about their company's performance over the next 12 months. Nearly half of CEOs are optimistic about the global economy, which is up from 7% from the fall of 2023 and up 29% from the summer of 24. So now, in all fairness, right, this survey, I think, was done at the end of last year. So, it'll be interesting to see the next time they do that if, one of the things that I was reading yesterday is that, and they don't have, it's kind of funny, it's always hard to trust this information that's coming out because it's all anecdotal, it's onesies and twosies. I haven't seen any like real survey yet. I'm seeing some really counter arguments being made, right? One argument talks about, that Trump's winning the PR battle. The next one talks about how voters are experiencing regret at having voted for him, right? Now, the things that are showing that there's voters having regret in voting for him, I don't see any actual real surveys showing. It's kind of like anecdotal evidence versus the article that talked about how Trump's winning the PR battle was going off of polls. Now, one of the arguments being made is that, compared to other elected presidents at this point in time in their presidency, Trump's approval rating is lower than the majority of them. But when you go and when you look at the fact that, I think it's like 47%.
Yeah,
well,
higher.
He's never hit 50% of the population that liked the guy in the first place. So is it really down?
Yeah. Well, yeah, and I think that comparison from Trump to previous presidents is kind of BS anyways.
Yeah, because I think it's really high compared to Trump
Well, yeah.
1.0.
Well, it is higher. Like right now, he's polling the highest he's ever been polling
Yeah.
at, and
Yeah.
when your name's Donald Trump, we have 90% of
All
what I
media
call
reporting.
mainstream media giving you 98%, like 90+% negative coverage.
I think it is like
not
98,
yeah,
isn't it?
and but like right now, even though he's got just about every like major media outlet against him,
Yeah.
he's got a positive approval rating right now. Like right now on Real Clear Polling, so RCP, the average aggregate right now is he's at plus 1.3. And like if I were to pull that up, let's see, I'm trying to find where Biden was. I think Biden was like negative 25 or so. I'd have to find it. But yeah, like that's a pretty hefty jump. And then also,
Yeah, which is staggering to think about in the face of this, right? So there's this fantastic AI platform called Perplexity, and it's one of the best for research, right? And so it pulls from NBC News and Navigator Research and New York Sun and all sides, all these different sources, right? And it says that the first, he's running 5% positive reporting, that during the campaign he faced a 93% negative coverage on ABC, CBS, and NBC versus 84% positive for his opponent.
yeah, and those aren't even as bad of offenders as some like MSNBC.
Yeah, yeah. And
Like,
so
those are ones that are, more so claimed to be a little bit more neutral.
yeah, right.
Obviously not.
Right. And so, in contrast, Obama received 42% positive coverage. So the fact that he can have ratings as high as what they are in the face of a withering onslaught is pretty stunning. So I don't know how much, that really matters, but I do think it definitely starts to take a toll on consumer sentiment, especially while you're waiting to see what the impact of some of these policies are.
Yeah. And so whether this is useful or not, but yeah, like Biden at the end of this term, RCP average of negative 18.1% on approval. And then as with like most elections, the polling for people's opinion on the direction of the country is just like spiking pretty much vertically. So right now it's still negative. Right now, 40.4% of the country thinks we're on the right track. But even this time, just 2 months ago, we were in the 20s. Let's see.
Oh, wow. So the people that think that the country's on the right track is like doubled.
Yeah. So we were in the 20s back in January.
That's amazing.
Yeah. And now we're in the 40s, and it's still climbing.
Yeah. Yeah. So just to recap real quick, we're 2 minutes over time. You have housing is down more than what was expected. Walmart took a massive hit of 6%, a little over, which caused kind of the whole market to suffer a drop. The market's been flat, more or less, with a slight downward trajectory since January 17th. People are worried about inflation due to tariffs, because that's the drum that's been being beat to death. But on the flip side, CEOs are extremely positive, the most positive point they've been in a very long time. And you should see that really result in them trying to drive their companies forward and investing heavily in employees and equipment and facilities and all the rest of that stuff. So we're going to keep watching this stuff, see what happens. And until next week, this is Elliot.
Nathaniel?
Signing off. Take care, everybody.